What's up, YouTube? Brendan from Market Makers Pro Trades Update. Gonna briefly cover the indexes and jump into commodities. A lot of requests in the comments for commodities. We're gonna look at metals, we're gonna look at oil, and we're gonna look at natural gas. All right, so let's talk about what happened today. Fed notes came out today. Nothing groundbreaking in those Fed notes, okay? The overall tone was more hawkish. No commitment to a 0.5 hike, a 0.5% hike. No commitment to a quarter point hike, a 0.25 hike. So a lot of people in the market are now calling for a 0.25 hike before the meeting. Why would they do that, you ask? Because they have that number priced into the market. If they know if they can get the 0.25 hike, the 0.5 hike most likely is off the table. But we shall see what happens next month. You know, the Consumer Price Index report came out as well, and that has some interesting numbers. Okay, one of the numbers that was interesting was food costs. Let me give you the exact numbers here. Food costs from this year over year, 12.8% up. Now, any of you that go grocery shopping, go to Starbucks, go to Chipotle, you know one of three things is happening. They either decrease the portion size, right? They increase the price, or they do a combination of both of those things, right? So we know that these costs are way low compared to reality. They have energy costs up 28.8%. I mean, you guys see with just the price of oil. Oil hit a 9-year high, okay? It was at 96 a barrel. It dumped some today with the news, but it hit a 9-year high. So as demand construction costs 16%. Let me tell you, that's going to vary state to state where you're at. In Florida, the lumber costs are up 50 to 100%. I can tell you, I saw in the news yesterday as well, fertilizer costs are up 100 to 200% depending on your region, depending on the type of fertilizer. Living on a ranch, these people don't pay these costs. You have to understand this all gets passed down to Joe Sixpack. You guys pay these costs, okay? The companies aren't taking a hit on their bottom line. They're just raising their prices. That's all that's happening in this sphere. Now, whether or not anything happens with Russia and Ukraine, a couple of things seem constant. Inflation is still going up, and the Fed's going to have a big decision to make. Will it increase the interest rates if the economy is weakening? And how much is the economy weakening? Q4 last year, quarter four, our growth rate was 14.3% because you got to remember things are opening up in some of the crazy parts of my country where they basically had lockdowns still. Things are opening up. So we had great GDP growth. The Atlanta Fed came out and predicted the first quarter growth for this year. So it was at 14.3 for Q4 last year. You know what the revised rate is for quarter one? 0.7. 0.7. So almost a 14% decline in GDP. So a lot of people are predicting the Fed may not be able to do a whole lot here because they know if they raise interest rates too much, if they do too much quantitative tightening, and this asset purchase program that they've been doing, they could really damage the economy in an already weak economy. So nobody knows, okay? Everybody's guessing. Nobody knows exactly what they're going to do. And I can tell you nobody knows because the market's not moving. The markets were barely down a little bit today. The S&P eked out a slight gain. But, the core structure is still here in place. This is the Russell on the daily, the higher low structure. We're not going to spend much time on these because these haven't moved. I mean, look at yesterday's candle. The candle bodies are almost the exact same size, the real body of the candles. You see this? So the 1 fib at 2080 is still your key resistance. The markets are like in pause mode, okay? They're waiting for some type of catalyst, bullish or bearish, to really drive the market. And you can see the Nasdaq is the same, okay? Nasdaq, here's today's candle, here's yesterday's candle. You are below your 233. The longer you stay down here, you're in danger of getting that death cross, just like the Russell has, just like Bitcoin has. So the Nasdaq needs to break up. We'll see what happens the rest of the week. But again, there's just no major news to move the markets today. Shopify took a beating, and NVIDIA came out right before I start recording my video, and the chip manufacturer, and they beat their estimates. So again, it's a mixed bag. The majority of the stocks in the Nasdaq are below their 50-day moving average. So lots of mixed bags for bullish and bearish news. But again, you just see it in the candle action. You don't have to see the news. You can just see what's happening with the candles. The S&P, again, just sideways, nothing, okay? It's between the 233 and the 55, so we'll wait and see what happens with these. Let's jump into commodities. Natural gas. I know everybody's like, natural gas, really? You trade that? Yes, because it's super volatile and you can make a lot of money. We got a couple guys that just joined trading for the first time. They took a natural gas trade and they crushed it. We put up a trade and it played out really well. Look at this rise, okay? Look at this rise for natural gas. So we've been tracking this, and just to show you the volatility of natural gas, check this out. Natural gas, where do I think it's going, by the way? I think it's going back up towards $6, okay? Natural gas super compresses and super explodes, okay? So it's all over the place. And this is what you want to see as a trader. You want to see explosions in price, consolidations, explosions, explosions, consolidations. And right now we're bottling back up. Hopefully we'll have a trade coming soon for this. Natural gas at 4.666. Not a good number. But that's where it's at right now. And I do think it's going to be moving back up towards the golden ratio at 5.509. So we'll keep an eye on that. But let's go to something probably more of you do trade or own, which is silver and gold. This is a 4-hour time frame on silver. Again, our goal here is to defeat the 618. Overall, I am bullish on the metals in an inflationary environment when things get scary, whether that's next month or 6 months from now. You will see the metals move up. And as a matter of fact, gold actually just hit a 3-month high recently. So they are making some progress. But we got to defeat the 618, which is at 23,855. In a world of overpriced assets, commodities are one of the only fair or undervalued asset classes. So you'll see a lot of people starting to get into commodities. And so let's see if silver can keep this up. Again, higher low structure, very bullish, bullish black swan. We want to see if we can get this wave, this compression wave up here and get this thing to crack the 618 and move on to the 1 fib at 2490. That will be your next goal. Now let me show you something with gold. This is a weekly time frame, okay? Gold up here was 2,075, and since then it declined a very nice percentage. Actually, let's get this measured out here. Pretty close to it. Where did it go from its high? From its high, went down about 19%. Massive move in gold, like $400, okay? And that high was August 3rd, 2020. I'm about to say 1920. I was thinking about the crash. 2020. So August 3rd. So it's been on a decline, then it rose back up, and it's just been a chop. But as you guys know from watching this channel, what happens when you're in a sideways market? You're either in accumulation or distribution. And let me show you something with gold. This is really cool. So check this out. This is the caterpillar on the weekly time frame on gold. Look at this thing bottling up, okay? And guess what? Gold is in the green. It's bullish. This thing is set to explode. I'm telling you, a catalyst in the market could send gold very high. This is the weekly time frame, the Mac Daddy of power for a pattern. You can see when the weekly compresses. Let me show you some examples of this. When the weekly compresses, look at this. When the weekly compresses, you get these big moves because it's a huge time frame. This takes a long time. This has been going on since August of 2020. Okay, this takes a long time to compress. When you take a long time to compress, you can have a very long explosion. This explosion here started June 3rd, 2019, and it went on till August 2020. This thing moved up for almost a year. So let's see if this continues to bottle up or if it just starts to move up. But what an exciting time to be trading and looking at gold. Highly suggest it's something you track. And of course, silver moves with gold most times. So just keep your eye on that. Here's our demand line. And my goal here for gold is the 1618, which is the golden ratio at 2065, okay? We get to 2065, you're going to have some retracement most likely. Everything has retracement. Remember, price moves in waves. Even when you're super bullish, you're going to go up, you're going to go down, you're going to go up, you're going to go down. And guys, we'll have a lot of trades on the metals and oil. I'm showing you that next because the oil is what? The liquid gold, right? It's called black gold, liquid gold. These are highly volatile assets. Gold is very volatile, but Bitcoin makes gold look tame. Bitcoin's 4 times more volatile than gold. These are a lot of fun to trade, and they're great to own, obviously, for a whole bunch of different reasons. But let's just see where this goes, because, you know, we'll see what happens if the markets start pumping, if gold will just keep retracing. And remember, the longer gold basically just goes sideways in the weekly, the tighter this is going to get, which means the bigger the move that will come out of it. So something worth tracking. Let's look at the 4-hour on gold. Again, looks totally different, huh? Here's our demand line, still bullish here. And we could be forming our LPS right here on Wyckoff, right? That's when you make that higher low, you get some consolidation, and then you get a breakout up, okay? And again, the 1618 here, 1895, that's where we'll be looking to go. We'll see if gold can do that, or if it needs to go sideways for a while and accumulate. Really, this is going to depend, just like with crypto, it's going to depend on what happens in the other markets. And as you guys can see, the other markets are basically flat. So we need a catalyst, a pump catalyst, a dump catalyst. Something needs to happen. The other markets, being all connected, will interact and react, and we'll get some movement in price. Let's look at oil. Oil finally cooled off a little bit today, okay? I love trading oil. Finally cooled off a little bit today, got all the way up to 95, 98. And when that news came out about the Fed notes, for whatever reason, oil decided to dump then at that point. It came down a few dollars. It went down all the way to, what's our low here? $90.71, 73 cents. It's at 91, 114. You know, I'm actually surprised it stayed this bullish, because we have our buying climax, we have a reaction, see the 2 red lines, that's our trading range, our up thrust that spiked us up to that 8-year high. And then from an up thrust, you get a sign of weakness, but that sign of weakness didn't even come down and test the range. So maybe, I'm hoping actually, it comes down and tests the range so I can get back in here for yet another trade in oil. And again, this would be biased to be a distribution box, but because of the macroeconomics, the macro politics that are happening right now, this is going to be easily flipped into an accumulation box, which would make it a reaccumulation box, in my opinion, on its way up. Because again, this is going to go to 125, possibly higher by the summer. The world will have an energy crisis. Even though people may be staying inside in some parts of the world, energy is being used, okay? So we'll see what happens, but this rise has been absolutely mental for oil. And you look at this on the other time frame, the larger, oh, this is a large time frame. You look at this on the larger time frame here on the daily. I mean, look at this. This oil's been moving like a crypto all the way basically since November 2020. It's just waving up. You see that wave? Make a base, wave, make a base, wave, make a base, accumulation, boom, back up. So this could be the beginning of that roll down a little bit, make your base in Wyckoff, and then get your higher low, and then move up. And that 1618 is at $101. Where's a 2618? There you go, 125, 296. Honestly, did not even look at the 2618, and that's my prediction. 125. I think oil is getting to the 2618, and I think it'll be there by the summer. So let's see. 4-hour time frame for oil, you can see that price declination. You can see we wick down into this trading range, hoping it comes back down into this trading range and really starts testing these bottom ranges. Love to see it retrace even deeper, because just like the metals, I know that oil will be finding its way back up very soon. All right, guys, hope you enjoyed the video. Smash the like button for me. Hit the subscribe button. Let me know in the comments what other commodities, things that you would like to see that I trade. I'll be happy to show them to you. All right, guys, take care. Happy trading.